So everybody thinks they're going to get a panel about our thoughts on the junior mining equity space, but really what we're going to do is have a cage match amongst the three best mining podcasters right now. So if you don't mind, I just got to kind of, roughen Antonio up here a little bit. My name is Trevor Hall. I'm the host of the Mining Stock Daily podcast, and happy to welcome in two people that I've known for a little while here. Justin and I have known each other from afar for a little while, but we just met during Deutsche Goldmesse, and Antonio and I have known each other for a little while now. Both my colleagues here do a really good job of putting together some very unique content, go into some deep dives, and I'm really thrilled to be sharing the stage with them. When we were talking about, when Kai put us on this panel, he said, do you know what you're going to talk about? And I was like, well, of course, we're going to talk about mining stocks. What else would we be talking about? But I thought we'd break it down a little bit and try to put together some ideas of tangible strategies here. So I just put the quote, strategies for the next bull run in junior exploration equities. I think we all know that the market has not been favorable. There have been some winners. The good exploration to a point is being rewarded, but it's not, the tide isn't lifting all boats. I think there is some brighter future here in front of us pretty quickly. The uranium sector has been very bright. Some of the industrial resources such as coal and iron ore have done very well from themselves. But it's just kind of hit or miss in a lot of places, specifically on the Canadian market. So, let's get a sense, maybe we'll start with you, Antonio, is if we start with precious metals, since this is the Deutsche Goldmesse. Let's talk about precious metals, and we see a really strong gold price. However, we see a fairly weak junior mining market. Where's the disconnect, and what do you feel needs, do you see an opportunity that's in front of us? I know, Lobo Tiger was very bullish gold last night. He did a very good job of explaining. I know you've talked to Lobo quite a few times. Do you share his same sentiment? Oh, you got to use the microphone.
Oh, my mic's not on? I think it is.
Oh, okay, there you go.
Okay, so fair answers, I really have no idea. I just try to talk to smart people and figure out what's happening through them. And you're right, so Lobo told me that, going forward for 2024, he thinks that what uranium stocks did in 2023, gold stocks are going to do in 2024, more or less. And I guess I could see that, but right now it's really all about risk. So risk is off the market right now. Nobody cares about these companies. Everybody knows that they have a hard time financing themselves. There's also the argument to be made that maybe Canadian markets are broken because there's no money. There's no money being raised on the TSXV either. But if you look at, there's only a few a few mining companies in Norway, for example. If you look at the amount of money that they are raising with the types of projects, it's just a complete disconnect between the exchanges. So maybe there's something going on there, because you say gold stocks are lagging. Some of the Aussie stocks are doing very well. There's a lot of money on the Aussie markets. So maybe it could be something to do with the exchanges too. So
Justin, let me ask you, because you make a living with PI Financial here, so I know you got to tread carefully when I ask you this. But are the Canadian markets broken?
Yeah, look, first I should preface by saying, full disclosure, disclaimer, I have to say disclaimer, but basically whatever I say, just please don't take it as investment advice, for information purposes only. And I'm not here to solicit any buys or sales of securities, first of all. So that formality is out of the way. Are the Canadian markets broken? Look, so the one way I guess in which I look at it is, quite frankly, there's probably too many public issuers. So there's a lot of capital that's locked up in some issuers that perhaps aren't spending that money as efficiently as could be, if you will. So that's perhaps one issue that could be addressed, but that's probably for the exchange or the Securities Commission. Look, I think what it ultimately comes down to is there's capital there, but it's perhaps more for special situations, right? Perhaps on the back of a big discovery, right? So if we look at more recently, maybe going back now 12 plus months ago, but Patriot Battery Metals, right? What did they raise? About 65, 70 million. Fireweed Zinc has had some success in terms of raising what is strategic capital with the Lundins. Like, I think there is capital out there. It's not as abundant as it was a year and a half ago or 2 years ago, but for those special situations which perhaps are meaningful discoveries, that capital will come.
One of the conversations we've had on Mining Stock Daily podcasts over the last couple of weeks is the mining equities needing to have some sort of competitive advantage for what would be perceived as the lowest risk asset in the market, and that would be U.S. Treasuries. You can go out and buy a 5-year U.S. note and yield, well, I don't know what it is, 4.8 or almost 5% now. And that's supposed to be riskless, right? If you are a major miner here, how are you to compete with something that's supposed to be riskless? Do you need to consider putting out a special dividend? Would that sway some people into the stock? I guess, like, what is that competitive landscape here when you have the largest, most safest asset yielding what is pretty good returns right now?
I have no idea. That's it.
So one thing maybe to touch on is, Lobo, I think, touched on this yesterday and expanded on it pretty eloquently, but looking at basically real rates, right? So looking at treasuries as, if you will, almost a substitute or in competition against gold, right? And so if we see real rates drop, that should bode well for the precious metals, 1. 2, but if we remain in what is a higher interest rate environment, mining assets, right? When you look at the discounted cash flows, the denominator is basically the interest rate, right? And so just now, I think we're starting to see analysts account for those higher discount rates in calculating the NPVs of projects.
So it's no longer 5?
It's no longer 5, no.
Do you put a gold project at 8?
I think our analyst is, and I could be wrong here, so excuse me if I am wrong, but I think they're using an 8% discount rate for a gold project and 10 for a base metal.
A 10?
Yeah,
Wow.
yeah.
Still using 5.
They're still using 5? Maybe if they want to be, let's say, generous, but if, for using a 5% discount rate and that's the equivalent to treasuries, that's pretty low in my opinion, but
Yeah.
I'm not the analyst, right?
Yeah. What are the strategy? I also had a conversation with a couple of the royalty companies, and you would think royalty and streaming companies with a strong gold price, that there would be a little bit of more inflows into the royalty and streaming equities. I don't know if we're necessarily seeing that right now, especially in kind of the lower, smaller cap type of royalties. But is there, to me, like, without doing some deep digging and just kind of watching companies and seeing their charts and seeing where the precious metal prices are, it almost appears like there's a little bit of arbitrage that's available right now. Any sense of if you agree with me or disagree with me, but is the royalty space a place where there might be a pretty healthy move, given where the metals prices are, but yet the exploration equities are kind of lagging?
Well, I think it really, everybody says this always, but it really depends on management in this case. So one of my, and fair disclaimer, non-confession, I'm going to be talking about Elemental Altus, and Fred is a friend of mine. I think is one of the rising stars in the space. But the deal that he did got a whole lot of attention, and a lot of growth is supposed to come from that. And so the market is definitely watching that. I can also see just if you will, superstition, when I interviewed him, the number of views that video would get is on the higher end relative to just an explorer. So in a sense, from my point of view, yes, but it depends on the deals that management is doing. Kind of a vague answer, but what do you make of it?
Yeah, look, the royalties are not something that I cover in terms of my business practice, so really no insight there, unfortunately.
No insight.
Yeah.
Okay. Well, I'll just keep it optimistic.
That's how I feel all the time, actually.
Yeah. Well, I mean, Antonio, you've been covering the uranium space quite a bit. I mean, it's had a tremendous move. We have seen big moves in uranium before, and then it's kind of had some humble and come back to Jesus moments after that. But I know a lot of uranium investors out there are saying this time is different. Is it different?
Well, it seems like it is. That's what I'm getting. My last interview was with John Ciampaglia. He's the CEO of Sprott Asset Management, to talk specifically about uranium. We spoke for about an hour and a half, and he said, yes, this time, this year is particularly different than last year. So saying this time is different is kind of silly, because it's those 4 or 5 words, whatever. I can't really count that people say are very dangerous. But just this year, these 12 months that are to come are much different than the 12 months that just passed within uranium. So yes, to answer your question, I think it is.
Yeah. To add on that, and maybe you could speak to it further, but I think the game changer was basically with Sprott basically taking over management of what was UPC, now Sprott Physical Uranium Trust, right? Like that to me was the genesis to really kind of, shift things, if you will, in favor of.
Right.
Yeah.
So there's still opportunities in the uranium space?
Some things are cheap. Some things are cheap for a reason, so to say. A lot of them too. So uranium is kind of that crazy space where, but then at the same time, sometimes it just doesn't matter because it's uranium. Last time when it went it went up to $140 a pound, inflation adjusted, that's like 180 2 years ago, so probably 200 now or something along those lines. And if that happens, because uranium is at 80 now, and people say, oh, it's as high as it was 15 years ago, but adjust that for inflation, 15 years ago, that $80 would have been like 50. Mm-hmm. So uranium is basically at 50 now, relative to, if you compare it inflation adjusted to where it was before. So there could be a big blow off top, and the fundamentals definitely support it. This has become a seller's market. The producers dictate the contracts. The producers dictate the ceilings of those contracts. Utilities are buying. Cameco is buying in the open market. I've also interviewed Grant Isaac, CFO of Cameco. He's an absolutely awesome human being, and so yeah, they're also buying. Like basically everybody's buying, and we have the financial players too. Sput is not the only financial player out there, although the biggest one, and then all the other ones are rather obscure. They don't really tell us what they're doing, but they're doing something. And I've interviewed some of their physical traders as well, and they're basically all saying, yes, we're buying in. So yeah, that's what it comes down to.
Okay. Justin, do you have anything to add?
Yeah, so maybe looking at the equities side of things now. So I think what's really interesting about that space is I'm not sure the exact number of issuers that exist under the sector. But I think it's a small number of players relative to, say, base metals or precious
like
metals.
100 companies.
Yeah, say 100 companies relative to several hundred for gold. But it's a small number or a small investment universe. And if you have a large pool of capital come in, I think the valuations that some of these companies might be able to achieve will be pretty astronomical.
Okay.
I think we see similar with the silver explorers and developers as well, or we had in the past.
I'm a little bit more of a sentiment guy on my side. So a little bit of background. I remember in August of 2020, I was getting new gold equity IPO deals like on my desk left and right, like a couple times a week. And in hindsight, obviously there was that gold fever in the fall of 2020. In hindsight, I should have recognized this is a little too hot and the sentiment's too much. And sure enough, that's where we kind of started the turn to where we are now. In hindsight, we can say that. But with uranium, it does have this genuine, overly done sentiment at times when there's a big bull run in the uranium market, right? But and I don't know if sentiment in uranium. What's unusual from what I'm observing is sentiment is hot, but it's not overly zealous. And I'm not getting, news that there's a new uranium company that's, stake land in the Athabasca Basin for the 16th time. So we're not seeing that. So, could we make the argument that, uranium's hot, but the sentiment isn't overdone yet?
I guess you could say that way, but also uranium is just a completely different commodity. It trades in a completely different way than any other commodity, and you really have to spend time to understand it, which is why it also has a cult following. People who spend time to understand it start loving it so much that if you want an engagement farm on Twitter and gain a bunch of followers, you just have to ask people, how much do you love uranium in a poll, and put in 110 and 120%, and then you're going to get 5,000 followers in no time. So it can go, like if you're measuring it in some kind of an absolute amount of crazy, like uranium doesn't go to 100% crazy. It goes to 500% crazy. So even if we're at 90% crazy right now, it can always get sillier.
Yeah.
That's what it comes down to.
Yeah. Speaking to, say, clients that are in the industry, namely, let's say, engineers or perhaps geologists, I think, quite frankly, a lot of people are underweight the sector or have no exposure, simply because there was, for almost a decade, no reason almost to have exposure to the space. It was pretty well dead, right?
Yeah.
That's certainly changed, I think, more recently. But I think that, generally speaking, certainly the generalist investor and even those in the industry don't necessarily have much exposure, if any.
Okay.
So
It's also not as easy to get exposure to it. That's one
small
thing.
investment units.
Look at the companies that have performed well. What's that? Cameco. Sput's
NextGen.
performed very well. And NextGen, sure, because there's a lot of liquidity.
Yeah.
And that's what people buy. When I asked Rick Rule 2 years ago, what do you think the type of companies that are going to be in uranium that are going to perform well, because I didn't want to ask for an immediate stock pick, he told me Cameco right up. And then I asked him that 2 weeks ago, the same question, what do you think is going to perform better now? And he said Cameco again, because he expects exactly that, under exposure to uranium to change, and he's looking for where the fund flows really going to go to.
Yeah.
And he said, yeah, Cameco, Sput. Now, obviously, Sput, so Rick is one of the biggest shareholders of Sprott, so it makes sense that he'd be saying that, but at the same time, it also makes sense to me.
Yeah. Let's turn away from uranium. I want to ask about copper.
Okay, I'm
Copper.
leaving.
What's that?
I'm leaving.
You're leaving copper? Okay. Well, no, but it's interesting because copper actually has had a pretty decent bounce. A lot of the copper explorers and developers, I guess, have started to move, but not necessarily really. Is there a strategy? Me personally, in agreement with what Lobo said last night, recessionary fears scare the living hell out of me putting money towards copper right now. I just don't, for me personally, my investment thesis is I don't see a clear runway quite yet. And if we do have a recession, the magnitude of that recession will have, the same effects on the copper price. In your minds, is it time to put money to work in the copper space? Are you putting money to work in the copper space, or is it something to where you, like me, you're just kind of watching and observing and waiting for clarity?
So if we're talking about me personally, and I have a different approach to investing myself, because I lost money going the top-down route, where I pick a commodity and then deploy capital that way, saying, okay, which companies am I going to buy within this commodity? I lost a bunch of money, and I turned the triangle upside down, and now I go bottom up. So I start with a company first. So if a company has a good enough deposit in the making, I could put money in whatever commodity it might be. So I don't think I'm the right guy to answer that question.
So that's funny. So I actually have a different approach. So I'm kind of top down, if you will, trying to go with the trend, if you will, on a more macro level. But I think what Lobo said yesterday, my thoughts pretty well echo his. So if we are in fact going to see, say, a global recession slow down, and he talked very succinctly yesterday about Dr. Copper, I suspect that we'll see the price of copper decline. So am I personally putting money to work in copper plays? No. But if I was to, and that would probably be in conjunction with, let's say a recession, and that'll be pretty definitive and obvious, I think, to us all when that happens. I would say probably want to start with the bigger, kind of more liquid, large cap names in the space, right? Have your pick who that may be, because that's what the institutional capital certainly will gravitate towards first, right? Mm-hmm. So talking about the flow of funds, right? What might move the needle first, or what might move first because the capital is going there first, will be large cap, in my view. And then you can probably, start to trickle down towards eventually the Explorcos at some point.
Okay. How does your investment thesis fit in with the gold space right now, Justin? We're seeing pretty good gold. There's more reasons to be bullish gold right now than there is to be bearish.
Yeah, no, exactly. And I think ultimately that comes down to basically real interest rates, right? So it pretty well looks pretty clear, but we'll see in due course that the US Fed has finished raising rates. Bank of Canada pretty well has definitively said that they've stopped raising rates. And so if that's the case at some point, and what ends up happening historically is the Federal Reserve or the central banks tend to raise rates, consecutively, hold for a period of time, and then cut rates. They don't do the back and forth, right, like ping pong. So if we are heading down a path of lower rates, I think, again, historically, that bodes well for precious metals. So, don't hold me to it, but I think we did see a bottom in the price of gold here. What was it, October last year of 1,600, give or take. And if rates do, in fact, start to decline, then that bodes well historically, again, for precious metals.
Well, it's interesting timing here. I mean, not only do we have a lot of gold equities, a lot in the exploration space that are very beat up, and a lot of them hitting 52-week lows or near that, with gold sitting at $2,000. That's where we ended the week yesterday on the front month futures basis. I think it was 2003. The equities don't necessarily need to participate with a gold move, right? With the move in the metal. You would expect to do that, and sometime it actually will. And so for me, I want to start looking, and I actually have started deploying capital into gold exploration companies that have good management, good projects, and actually have cash in the bank. I'm not interested in a company that, has less than $1 or $2 million in the bank. I mean, that's kind of a line in the sand for me. I mean, Justin, you and I were chatting a little bit earlier today about, kind of looking towards the gold space and those equities. I mean, what are some of the criteria you have within your investment thesis if you're deploying capital in exploration?
Yeah, so if we start to look at more, say, name specific, right, like what would be the investment criteria? I think it was Doug Casey that he had kind of this criteria of the 8 or 10 Ps of resource investing. And so I think you can dwindle it down to 5 Ps, but basically top of the list is people, right? Personally, I think at the end of the day, the people, the management team, so forth, they are the ones who are probably best capable, certainly they're in charge, but best capable and skilled in terms of de-risking the company, be it financially, raising capital at the appropriate times, and then certainly de-risking the asset by moving forth with exploration or development of the asset. So people, for me, is top of the list. So at the end of the day, I think when we are making an investment in a company, we're truly making an investment in the people and supporting them.
Yeah. Do you have any criteria with your investment if you go look into the explorers?
I do, yeah. It's capital comes definitely sort of at the top of it, and there's something that I've noticed happening more and more right now. That's companies pairing their assets with majors, and having a major spend some money on their project to earn in an interest. That's obviously forward selling upside, but at the same time, 25 or 50% of something is better than 100% of nothing that you're not doing any work on, or you're losing the asset because you're not able to raise capital because nobody cares about $5 million or $7 million gold explorer. So that's something that I am actively looking in. I have a position in a company that has a comparable situation, but just an investment for just a JV doesn't cut it for me. What else I'm looking for is hopefully a chunk of that company being bought by a major too. So for example, let's say Newmont or whatever, Newmont buys 10, 20% of that company, hopefully not a blocking interest, so not more than 19.99%, but so they buy, let's say, 10% of that company, and at the same time, then they form a JV, and they fund that JV to earn up some upside potential. If they're doing that on half of the project, for example, and not on the whole project, even better, because they find something and then the other half is close to it or looks like it could also be advantaged. So that's something unique that I've noticed recently.
Yeah, well, the market has not been rewarding these earn-in agreements or JVs at all. Sure. I mean, for the last couple of years, I know of companies that have done deals with Newmont Gold Mines, and Newmont takes on all the costs to drill this project off with carried interest, and they can guarantee $10, $20 million worth of work after so many years, and the market just hums about it. I mean, there's no value in those those earn-in agreements whatsoever. I mean, so if the market's not rewarding them, obviously, do we need to start building that into kind of our investment thesis as well, or is that something we could potentially look forward to and adding value when a positive market does return?
It depends on what the company's finding. If they're making good discoveries with that money, then sooner or later, I suppose the market is going to reward them. I don't know yet. I haven't had success with the strategy at all. It's something new, so I have no idea if that's actually going to happen. But obviously finding something, under the caveat that it's finding something. Also under the caveat that the company's not doing that and at the same time diluting its own share structure to fund G&A or whatever. Under the caveat that G&A has been dialed back to the minimum and they have just a couple of guys doing the work together with a team out of the major. So share structure is what I mentioned there. So something that I want it to be tight. I want the company to be able to weather a storm and sort of have a runway of like a 2-year time period is something that I feel very comfortable with. If it's a year, it's also more comfortable if they're drilling and have clearly defined targets that they have a good geological thesis on and can explain even to my simple brain why they think they're going to find something. And then you just let it sit. But again, it takes the good share structure, capital, and most of all patience, I suppose.
Yeah. Justin, what are you seeing from your seat as far as exploration and discoveries? The market is uniquely rewarding specific discoveries. Hercules has been a big gainer with their discoveries. We talked to Founders Metals here that were participating, which is a very interesting story. They've done good work down in Suriname, and so the market's being very, very specific with who and what they're rewarding. What are you seeing from where you sit of who is getting some of that inflow?
Yeah, no, look, I think you're absolutely correct. And I think ultimately what it comes down to is the threshold or the benchmark in terms of what's needed to get the market excited is just that much higher today than it was, say, a year and a half ago, 2 years ago, simply put, right? Capital is scarce. I mean, we obviously talked about this, but capital is scarce. But when there is an opportunity, or I should say when there is a company that looks like they're onto what seems to be a discovery and there's an opportunity there for growth or development of the asset, capital does find its way there. So ultimately I think it just comes down to the benchmark or the goalposts have just moved up.
Yeah. I know, Justin, I know you can't give any specific stories or ideas, but Antonio, anything that's caught your attention the last 2 days that maybe is new and exciting that you're going to follow up on?
I'm going to follow up on everybody I spoke to because I like hearing different stories and meeting people, but I'd prefer not to give out any names because I've literally just not been successful yet. I'm only here to make Justin look good. So I don't want to give you stocks that are going to lose you money. So, well, unless you like losing money, then come talk to me. I can give you a bunch of names.
All right. Anybody have any questions? We got about 30 seconds if anybody has any questions. If not, we're going to wrap it up.
Thank you.
All right, everybody. Thank you so much. Appreciate you.
Thank you.